Over the past month, a curious drama has unfolded in the heart of Japan's financial establishment. The protagonists are the leaders of the Bank of Japan, that august institution tasked with stewarding the world's third-largest economy through the delicate dance of monetary policy. And the stakes? Nothing less than the future trajectory of inflation, interest rates, and the very fabric of Japan's economic resilience. At the center of this theater stands Kazuo Ueda, the newly installed governor of the Bank of Japan, a man whose every utterance is scrutinized by legions of analysts, investors, and policymakers alike. Flanking him are his deputies, Shinichi Uchida and Ryoso Himeno, each with their own nuanced perspectives and roles to play in this unfolding saga. The curtain rose in dramatic fashion on July 28, when the Bank of Japan stunned global markets with a hawkish tilt, signaling its willingness to raise interest rates as inflation edges closer to its elusive 2% target. It was a bold move, one that rippled through financial circuits like a tectonic shift, sending the Nikkei 225 into a record-breaking plunge and contributing to a broader market rout that left investors reeling. In the aftermath of this seismic event, the Bank of Japan's leadership found itself engaged in a delicate dance, a choreography of words and actions aimed at reassuring markets while preserving its steadfast commitment to data-driven policymaking. First to take the stage was Deputy Governor Shinichi Uchida, a veteran architect of monetary policy and a trusted voice within the bank's hallowed halls. On August 7th, Uchida struck a decidedly dovish chord, his measured tones intended to soothe the frayed nerves of investors and quell the market tumult. The Bank of Japan will carefully examine the impact of market developments on the economic and price outlook, Uchida intoned, his words carrying the weight of decades of experience. We will make our policy decisions based on this analysis. It was a deft maneuver, a skillful deployment of rhetorical balm to calm the roiling waters of financial uncertainty. And yet, even as Uchida's words echoed through the corridors of power, whispers began to circulate that his message might not represent the full symphony of the Bank of Japan's intentions. Enter Ryoso Himeno, the former bureaucrat at the Financial Services Agency, now elevated to the role of deputy governor. On August 16th, Himeno took to the stage in Yamanashi, a picturesque region nestled in the heart of central Japan, to deliver his own aria. The Bank of Japan's basic stance, Himeno declared, his voice carrying the weight of authority, is that it will examine the impact of market developments and the July rate hike. If it has growing confidence that its outlook for economic activity and prices will be realized, it will adjust the degree of monetary accommodation. In that single, carefully crafted statement, Himeno managed to both reinforce and nuance the bank's position. Yes, the door to further rate hikes remained ajar, a prospect that kept the beleaguered yen under pressure in the wake of the Federal Reserve's own hawkish signals. But Himeno also injected a note of caution, acknowledging the lingering instability of financial and capital markets, and the need for vigilant monitoring of their developments. It was a masterful performance, a deft balancing act that neither foreclosed the possibility of future tightening, nor committed the bank to an imminent course of action. And yet, even as Himeno's words reverberated through the halls of finance, a sense of anticipation lingered, a collective holding of breath as all eyes turned towards the ultimate arbiter of this intricate dance, Governor Kazuo Ueda himself. On August 18th, Ueda took center stage, his words echoing those of his deputy, Himeno, in a carefully choreographed duet. The bank needs to monitor market developments with the utmost vigilance, Ueda intoned, his measured cadence belying the weight of his office. The bank also intends to carefully examine the impact these market developments at home and abroad have on the outlook for economic activity and prices. With those words, Ueda seemed to reinforce the bank's stance of cautious observation, a commitment to data-driven decision-making that takes into account the ever-shifting currents of global financial markets. And yet, even as he spoke, the undercurrent of hawkishness remained, a subtle reminder that the path to higher rates remained a viable option should inflationary pressures persist. As the curtain fell on this latest act, a palpable sense of uncertainty lingered in the air. The Bank of Japan had deftly navigated the treacherous waters of market turmoil, deploying a carefully calibrated blend of hawkish and dovish signals, neither committing fully to one course nor foreclosing the other. But beneath the surface, deeper currents were at play, currents that spoke to the fundamental challenges facing Japan's economy and the delicate balance its central bank must strike. For years, Japan has grappled with the specter of deflation, that insidious force that erodes consumer confidence and stifles economic growth. The Bank of Japan's long-standing commitment to ultra-loose monetary policy, including negative interest rates and vast asset purchases, was a bold and unprecedented effort to break free from this deflationary spiral. And for a time, it appeared that this audacious strategy was bearing fruit. Inflation, long the elusive quarry of central bankers the world over, seemed finally to be stirring from its slumber, edging ever closer to the bank's coveted 2% target. But as the global economy roiled in the wake of the pandemic, supply chain disruptions, and geopolitical upheaval, inflationary pressures took on a life of their own, morphing from a long-sought goal into a potential threat to economic stability. Suddenly, the Bank of Japan found itself at a crossroads, its long-standing commitment to accommodative policies colliding with the imperative to maintain price stability and preserve the purchasing power of Japanese households. It is against this backdrop that the recent drama has unfolded, a high-stakes performance in which the bank's leadership must navigate treacherous currents, balancing the need for vigilance against the risk of overreaction, all while maintaining the delicate equilibrium upon which Japan's economic fortunes rest. And yet, even as the curtain falls on this latest act, one cannot help but sense that the true denouement of this saga remains unwritten. For in the world of central banking, as in the theater of life itself, the story never truly ends. It merely transitions into new acts, new scenes, new challenges to be confronted and overcome. As the spotlights dim and the audience files out, one can almost hear the whispers of anticipation, the murmurs of speculation as to what the next act might hold. Will the Bank of Japan forge boldly ahead, raising rates in a bid to tame inflationary forces? Or will it hold its course, opting for a more measured approach, allowing time for the currents of the global economy to settle before charting a new path? Only time will tell, for such is the nature of central banking, a delicate dance performed on a global stage, where every step carries profound consequences, every movement rippling outward in ways both seen and unseen. And at the heart of it all stands the Bank of Japan, that stalwart institution tasked with shepherding Japan's economic destiny, its leaders performers in an eternal ballet, their every gesture scrutinized, their every utterance analyzed and debated, as the world watches with bated breath, eager to divine the hidden meanings, the subtle nuances that might portend the next act in this grand, unfolding drama. For in the end, it is not merely the fate of interest rates or inflation targets that hangs in the balance, but something far more profound, the very fabric of economic stability upon which the dreams and aspirations of a nation rest. And as the curtain rises once more, we can only watch and wonder, marveling at the intricate choreography, the delicate footwork, the masterful performance of those charged with guiding Japan's economic fortunes through the ever-shifting currents of the global financial stage.